Welcome back, traders and investors. We have on the line Eric Jackson, managing partner at Ironfire Capital. He is the founder and managing partner. Found this firm back in 2007. So that was probably a good time to start buying, huh, Eric?
Well, you certainly learned a lot going through that period. Coming out the other side, you see, seeing the ups and downs of the markets. That's for sure.
Okay, just give us a little bit of your education and your background in the markets.
Sure. So I went to business school and studied management and strategy at Columbia in New York. And one of the interesting parts of my studies there is I was there during the dot-com bubble in the 90s, but I was working with a professor on topic of corporate governance. We were doing a lot of research. I got a big grant from McKinsey and Korn Ferry to actually try to uncover, you hear, even today, you hear a lot of talk about corporate governance, but there's not, and then people saying, oh, you should do this, you should do that, you should change you have a split chairman and CEO and this kind of thing. But there haven't really been any studies that prove that doing any of these things, changing who's on your board of directors, actually links to performance. And while I was studying that topic, I was chatting with a professor who said, "Did you realize, Eric, that there's a type of investing that where corporate governance plays kind of a key input role in terms of how they assess companies and an opportunity and so forth?" And I said, "Gosh, no, I didn't." And he said, "Well, it's called activist investing. It's kind of like value investing, but they look for sort of event-driven situations where they can perhaps push to change who's on the board, change compensation that might be going on, in addition to a bunch of other stuff, selling off divisions that don't really make sense and so forth." So I got introduced to several investors back at that time, and I was really intrigued by the investment style because it seemed much more within your control as an investor, rather than just sort of passively sitting back and looking at a screen and jumping in on momentum trades and so forth and hopping back off. This was more kind of like a fundamentalist view, more longer term, but trying to influence the outcomes in companies. And so I got sort of an opportunity in 2006 and 7 where I was as an individual investor, I was kind of watching what was going on with Yahoo, which even back then was having all kinds of problems and kind of sort of figure out what its identity was and so forth. And I had this thought that they would make a great target for an activist investor. And at first I called up a bunch of big activist funds and actually tried to pitch them on the idea of looking at Yahoo. And back then in 2006, unlike today, a lot of the activist firms were saying, technology is not kind of the industry that we like to go after. We prefer, manufacturing. We prefer where there's hard assets. Technology firms are usually kind of more, fluffy valuations and so forth. And so nobody was really that interested at the time. And I had this idea of trying to organize something myself and then trying to pool other frustrated individual or institutional shareholders in Yahoo, sort of as like a coalition almost, and force change that way, using the internet and so forth. And it was interesting kind of campaign, led to some change, led to kind of some, I guess, notoriety for me. And then coming out of that, that's why I decided to, take kind of the next step and start Ironfire to try to do this regularly, and so definitely still have this sort of fundamentalist value-oriented approach where I'm looking for kind of unloved companies where there's some kind of clear catalysts so that I see in the next 2 to 6 months that will probably help get get the public or get other investors kind of more interested and excited in the company.
You and Carl Icahn then, huh? Are in the same thing. Are you still following this whole Yahoo and Alibaba thing? We had Dan Ars in the chat room, and if you're still following, he's kind of when do you think that Alibaba's finally going to go public? And then if you're still in the Yahoo, do you have a price target on it?
Right. Yeah, I still have it long. I've lightened my position considerably. Especially over the last few months as the market volatility has hit, and Yahoo is actually it's funny now. It trades more like one of these Chinese internet stocks rather than a couple of years ago when it was sort of just like there's a lot less of correlation to the S&P and a lot less volatility to Yahoo. So I think the filing for the IPO for Alibaba is going to come this month, before the end of this month, and I think that the actual IPO itself probably is going to be, I would guess, September. I don't think they're going to get it out before the summer. Kind of holidays set in and people head for the Hamptons and all that. So I think they'll probably hold off and wait till the fall. And I'm kind of I do think on the one hand that Yahoo, a lot of people feel like it has no future post IPO, and they feel like the core is rotten, and that there's no strategy that Mercer has, and that they're going to waste the money that they do get from selling part of their stake. And so that the contrarian in me, kind of likes Yahoo for that reason, because I think with some buybacks and with some smart acquisitions, there is a kind of a case that I could see where they actually do increase their EBITDA, and actually the stock does go up. And then I think if all the stars align, I mean, I could see a couple of years from now Yahoo being a $70 stock.
Whoa.
Then the more pessimistic side of me though does worry about the acquisitions that surely Marissa Meyer is going to do with the money, and Tumblr I think was just the beginning, and it's really tough to see what there are lots of interesting companies out there, like I don't know, pick Yelp or OpenTable, that she could that I'm sure she's interested in, but you're going to spend a lot of money on those companies, and at the end of the day, it's not really going to move the needle for Yahoo from a revenue or an EBITDA perspective. So, I don't think she'll get rewarded with Yahoo's share price if she makes those kinds of deals. I think AOL is a great fit for Yahoo. Clearly Yahoo's like very keen on premium video, and AOL has done a fantastic job in putting together a great collection there. So I'm long AOL, and I'm kind of more interested in putting my money in a stock like that's smaller and kind of less. There's less focus on it rather than Yahoo these days, which is getting a lot of attention around the Alibaba IPO.
Yeah, it took out this 34 area on Friday, managed to close above it. Just technically speaking, it better get back and hold this 34 level because, on the charts here, you're looking at 32. So, critical area. So you run two things over there. You run a hedge fund and you also run an angel fund. So, could you just talk about your strategies a little bit in your hedge fund?
Yeah, the strategy, that's what I'm primarily focused on. The angel
Okay.
fund is more of my partner. So on the hedge fund side, it's a long short portfolio. It tends to be concentrated in kind of real, high conviction ideas. We're looking for stocks that are, undervalued by 30 to 40%
Wow.
by our analysis, and that's usually either some of the parts or, looking at relative comps. We want to find companies that are kind of forgotten about in their industries. I tend to have, more of a tech focus, although it's not exclusively tech. But Yahoo 2.5 years ago was a prime example of kind of a great kind of story there, because at the time I loved it for the Alibaba investment and their Yahoo Japan investment, and nobody was talking about Alibaba back then. It was people thought actually just the contrary. There was this big kind of controversy where David Einhorn blew out of Yahoo because Alibaba had taken one of their assets called Alipay and just sort of taken it out of their group, and a lot of U.S. investors were saying, you can't give any value to this Alibaba stake because Jack Ma might wake up tomorrow and just rip up the contract, and Yahoo had no recourse. So that's a great example. I mean, I think AOL is another kind of example of an unloved kind of stock that people just sort of get bearish on from the headlines and kind of forget to kind of look under the covers at some of the, what's going on there in their different business groups from a, even from a net operating loss perspective and some of the things that they continue to carry there. I think Zynga is also a really interesting stock, especially post this King IPO debacle, which although it's come back a bit. I think Zynga, is primed for kind of some interesting new games to be pushed out in the second half of this year, which, if even one of them is kind of marginally successful, I think will dramatically increase their MAUs and DAOs and suddenly get investors to pay attention, very differently to that stock from instead of just sort of thinking of it as a washed out IPO the way they do now.
Okay. So what about like some of the old tech? I mean, I guess old Apple. I mean, Carl Icahn's taking a real stake in the Apple. I mean, is that? I mean, is that kind of is the ship already left a dock on that one, or is that something that you include in your portfolio?
I have owned Apple, and I continue to like it and follow it. It's not something that I own now, and the main reason is that it's just too big. I would just rather spend my time focused on some of these smaller cap stocks that if you get it right, have a chance to move dramatically more to the upside. And so with Apple, I do think that it is undervalued here, and I do think that we're kind of heading into this period where there are going to be these announcements in the June developer conference, and then the product releases that will follow that over the summer and into the fall. That I think have a chance to kind of be very interesting, like the iWatch and whatever they do with the TV and so forth. I tend to think that at these levels, it is underpriced, and people are assuming that those announcements are going to be duds, and I don't think that they will be. I think the iWatch will be pretty interesting when it does come out. So I think that the stock has a chance to go higher from here. Where does it go? I don't, maybe 600 by kind of the end of the year, and so that's a nice return. And I think with options, you can obviously magnify that if you're right. But I don't own it, and I don't plan to, just because I'd rather focus on something that maybe with some good news has a chance of doubling, and I don't see that happening with Apple this year.
Okay, and then you also take the short side of things here. Well, obviously you can't get
hmm
involved as an activist in the company and tell them that the company is overvalued here. But do you have any targets, any short candidates? The markets really came off hard on Friday, getting some follow through here in today's session, and some of the new tech really got beat up, like Twitter and Yelp and LinkedIn. Are those things getting out? Coming on your radar, either on the long or the short side?
Well, Twitter is one that I continue to really have a hard time understanding the stock price, even here, in the low 40s, from the highs of 70s. Um, it's I like the company, I like the service, but I've always felt from day one that this stock was like way overvalued, and it's I think there's a big shift going on right now, where people are moving away from kind of public sharing, and the Facebook and Twitter approach, to kind of private messaging apps. So, obviously we saw Facebook buy WhatsApp. I think the more interesting messaging apps these days are the ones internationally that aren't public yet. Well, WeChat is part of Tencent, so you can play that if you want to. Tencent's come off a lot. There's a company from service in Japan called Line that's rumored to be going IPO later this year. I think that'll be a really interesting one to watch. And what these services are showing is that this is kind of a new way people want to share information. I think Twitter, in the public way, the public kind of broadcast way, is actually, it's going to continue, but it's just not the dominant way that people will do things. There's a direct messaging part of Twitter, but that's kind of clunky. I don't think I don't think people will ever see Twitter as sort of a messaging app. And so I think there could be still a lot of downside in front of Twitter. We're seeing this. There's a Weibo IPO that's going to coming out soon. That's part of Sina, and it's sort of the Chinese Twitter. And you see a lot of stagnation there, and the valuation gap between a service like Weibo and Twitter is kind of staggering. And so you got to think like either investors are wrong on one or the other, or possibly both. But to me, it seems like Twitter is still way overvalued, and it would still be overvalued even in the 20s. So that's one that I think is particularly interesting from the short side.
Okay, and just comparing the valuations like between something, between Facebook and Twitter, is Facebook really worth 6 times more than Twitter? I mean, Facebook has really come off hard. I mean, that's what the market's saying. I mean, what's your opinion on Facebook?
Facebook's got it's got obviously the mobile revenue growth that I think has really been powering the stock and making the institutions buy in to this significantly over the last 6 months, and seeing this kind of as a new Google. But at whatever it topped out at in terms of market cap, I mean, it was obviously huge. And I'm not rushing to buy Facebook here. I mean, I think it's all. I would see it as another stock in kind of no man's land, like all the ones you mentioned, Yelp, maybe LinkedIn, probably I'd put in this category as well. But Open Table, all these kind of mobile first kind of stocks that I think are really fascinating, really interesting companies from a stock perspective. It's hard to be tempted by them because I still see some volatility ahead of us.
Okay, so do you look at charts at all? I mean, I know you look at things from analyticals, do your research and analysis and everything. Do you pay much attention to the charts, or are you just pretty much relying on your fundamental analysis?
Well, I think definitely when I started Ironfire, I came at it kind of almost exclusively from the fundamental perspective. But I mean, yeah, I think there's a lot to learn from the technical side, and it's certainly something I definitely pay attention to and factor in. I'd say still I get most excited about a fundamental story first, but I definitely come to respect the charts, and just as I'm sure like there are a lot of technicians out there too that you know you know they don't exclusively focus on the technical side. They try to factor in some fundamental analysis as well.
Okay, and just to end this segment, I mean, the market's had an incredible run. Friday was not a pretty day by any stretch of the imagination. Key reversal made a new all-time high and then sold off hard here. The buy the dippers have been there, all along the way. The last few years, you got in at a time 2007. Obviously, survived 2008 here. Are you going to any higher of a cash position now than you have over the last 5 6 years, or you waiting for the bull to continue on?
I'd say I'm at my highest level since the dark days of '08,
Okay.
'09. Yeah, I mean, I think that despite the volatility and the damage that was done in March, I mean, you're still really only talking about kind of a corner of the market with a lot of these high flying names, and just from the market average, it's still kind of benign, and for that reason the optimism that exists out there in sort of sentiment surveys is still pretty, surprisingly elevated to me. So I do worry that, these moves in these particular stocks are just kind of setting the stage for kind of, some bigger damage across, wider swaths of the market.
Okay, all right. We've had Eric Jackson on, managing partner at Ironfire Capital, giving his take on the market, tech stocks, approaching it from a fundamental view. Eric, thanks a lot for coming on. We certainly hope you can make it back on the show again.
Okay, appreciate it.
Okay, have a good day.